Hello, my dear children. In CA Foundation, the first paper is accounting. This accounting subject, there are totally 11 chapters. How many chapters do we have in the CA Foundation accounting? We are having totally 11 chapters like theoretical framework, accounting process, BRS, inventory, depreciation, bills of exchange, final accounts of a sole proprietor. Then we have final accounts of not-for-profit organization, incomplete records, partnership, and company accounts. These are the 11 chapters. And the ICI board also released the weightage that is to be given for every section. It is being mentioned over here. Here, the third chapter is BRS, right? The third chapter is what? BRS. In this particular session, let us learn some important theoretical concepts of our BRS. See, my dear children, BRS. BRS stands for what? Bank Reconciliation Statement. Now the question is, what is Bank Reconciliation Statement? It is a statement prepared to reconcile the difference between the bank balance as per the cash book with that of bank balance as per the passbook. Now the question arises, cash book. Cash book means what column of the cash book? Because generally the cash book covers cash column under the bank column. In passbook there is no such column because passbook is nothing but the bank statement. Now the thing is, BRS considers which column? Is it considers the cash column or bank column? Remember, BRS never considers the cash column. It always considers the bank column of the cash book with that of passbook. So ultimately what I can say is bank reconciliation statement is prepared to reconcile the bank balance as per bank column of the cash book with that of passbook. This is the meaning of BRS. Then the next concept. What are the reasons for difference in the bank column of the cash book with that of passbook? There are so many reasons, my dear children. Let me explain few among them. One concept. Among them, the one concept. Checks issued but not presented to the bank for payment. Assume that you are closing your books of accounts on 31st March. You issued a check on 10th March. The customer didn't submit the check to the bank for payment until 31st March. There arises the difference in the bank column of the cash book and passbook. Second one, checks deposited into bank. Checks deposited into bank. Checks sent to the bank for collection. Checks paid into bank. See the wordings. Paid into bank. What I said? Checks deposited. Checks paid into bank. Checks sent to bank for collection but not yet collected by the banker. You have deposited, you have paid into bank, you have sent the check to the bank for collection on 28th of March, but the banker didn't collect it before 31st March. That is also one of the reason why the bank balance as per the cash book and passbook does not agree. Third one, there are some transactions which are purely recorded in the passbook but not in the cash book. For example, bank charges entered in the passbook but not in the cash book. Another, some payments which are made by the banker on our standing instructions. Payment made by the banker but no intimation is received. In such case, the transaction is entered in the passbook but not in the cash book. Like that, there are so many other reasons which make the bank balance as per the cash book and the passbook does not agree. I hope Makla you got it two things. What is bank reconciliation statement? The statement which is prepared to reconcile the bank balance as per the bank column of the cash book with that of the passbook. Another, what are the reasons the checks issued but not presented to the bank for payment? Checks deposited, paid into bank, sent to the bank for collection but not yet collected by the banker. Bank charges entered only in the passbook. Payment made by the banker, etc. These are all the reasons that make the bank balance as per the cash book and passbook does not agree. Okay. Next session I go for other things of the same chapter. This is just a demo video to commence the online classes. Thank you Makla. Bye bye.